Hi, everybody. My name is Raj. I am the co-founder at Invest in Pre-Leased. And on behalf of the entire team, I welcome you all to this webinar on from Fractional to SM REITs, the journey from 4,000 crores to 40,000 crores. And whether you are an investor, a developer, or an investment manager or asset manager, we're building a platform to help you benefit from it. As I told you, I'm Raj and co-founder at Invest in Pre-Leased. And my background is that I'm a real estate consultant in South Bombay doing residential and commercial transactions since the last 18 years. I'm a second generation realtor. And together with Rishi, I've started a brand called Invest in Pre-Leased to cater to the pre-leased and fractional ownership market. We'd also like to tell you that, we've been lucky to see the entire fractional ownership journey of the platforms, right? From COVID days, we were lucky to help couple of platforms to kind of disseminate information and do some sort of conceptual sell about fractional during those days. And post that, of course, we've got a lot of investments going in these fractional ownership platforms. Not only that, we've also supplied assets to asset managers. And we've also very closely seen the challenges that the fractional ownership platforms have faced. More importantly, even what investors have faced, because even we work only with the top 4 fractional ownership companies in the country. And still, we've seen how the entire investment journey has evolved for the investor. And with that, I'd like to hand this over to Krupa to introduce herself.
Hi friends, I am Krupa Joisar. I am a company secretary and a lawyer specializing into corporate laws for now more than a decade. With respect to fractional ownership and SM REITs, I have been working with Raj and Rishi from vetting the document side. Again, we have been majorly covering investor protection while negotiating the documents with these fractional ownership platforms. Thank you. Rishi?
Hi guys, I am Rishi Dedhia. I'm a first generation entrepreneur doing commercial real estate in central suburbs. I've been in the field for the last 15 years and happy and lucky to be co-founding Invest in Pre-Leased with Raj. We predominantly focus into commercial real estate, so we have been transacting in industrial land, warehousing, office spaces, retail outlets, and we understand commercial real estate really well. And when we look at the fractional ownership platform, which has been in India for a good time now, but last 4 years have been really exciting for us since we co-founded the Invest in Pre-Leased, and we bring on that flavor of commercial real estate to fractional ownership. And me and Raj, we have kind of decoded how this mechanism works in India, and we are trying to ensure that through this platform of Invest in Pre-Leased, we help all these investors, all you guys, to profit from curated proposals. So with this, we move ahead with our first slide, or our first pointer that I will share. What do you think fractional, how is it globally placed? Now, this is one of the company that's called Cadre. They are managing assets technically of 1.2 billion. So that's where they have already invested, and 4.3 billion is the transaction value that they have already closed on. This is one of the fractional ownership platform that's operating out of US. The fractional platforms go back close to around 2 decades or more than 2 decades, which have been in existence in US and UK market, and they have been regulated. There's a lot of framework that has been there in and around the fractional structure in those markets, which we call it developed economies. That's US and UK and a lot of other countries abroad. We see a lot of companies like Cadre operating and managing a lot of fractional assets. Now, these vary across platforms, across industries as well. Like on the right, we see INR 4,000 crores. Now, that's the current market size of the Indian fractional ownership platforms that are currently operating in India. Now, I'm talking just the 4 or 5 or maybe 4 to 6 companies we have been doing this kind of work right now. Moving ahead with the next slide, I would want to say thank you to SEBI. Because of them, we are here today in terms of SM REITs. We were talking here because of them. We really appreciate the move by SEBI, because SEBI has been proactive with particularly coming out with the frameworks for SM REITs. SM REITs basically stand for Small and Medium Real Estate Investment Trust. That's where SEBI has been really active. This is the first time where going from the white paper, the case paper coming in, and to the actual framework, getting into implementation, and licenses being registered. SEBI has been in a record time of probably less than 18 months or 24 months is what we can say. Of course, there's a lot of groundwork that has been going for the last 4 years, but that's where the case paper coming in and the framework coming in. So that's really brilliant. What was the need for SM REITs? Why? So basically, what has been the pre-idea conceived that we feel that, okay, here we are today with SM REIT, we're discussing SM REITs, but what happened in the past? So we had this unorganized platform. Now, for an example, we all can go back maybe 15, 20 years back, where we had maybe a warehouse in Bhiwandi, probably old Bhiwandi, Kale, Dapoda, Ranal area. Those who are familiar with the Bhiwandi demographics. Otherwise, it's a location in the outskirts of Mumbai. And there when the warehousing market originated, there are old structures of RCC ground plus 40 height, and there were RCC structure, fully cement structures where people used to share those warehouses. So those were all oral commitments, or maybe multiple parties holding on to one asset. Maybe the building is maybe 10,000 square feet, 20,000 square feet, and multiple owners owning the asset. Now those were actually maybe together owned by a family or maybe known parties, and it can be just an oral commitment between the landowner and the warehouse construction developer. So that was the agreement type that was there. Decision making was absolutely informal and challenging. There are no formal documentation that was there in place. Now, how do you decide on the property management and selection? It was all left to one person who was heading the show. So maybe in your family, maybe your uncle, your grandfather who used to take the decisions. So back then in those days, it was all purely word of mouth that they used to rely on. And for example, for any given reason, if that person who was handling the management or the decision making is out, then the entire investment used to go for a challenge. Of course, it has been managed really well, and that's why we are standing here. But yeah, that it did have a structure to it. Now, what about the liquidity issue? Now, the liquidity issue, if we look at it, was really low in terms of you want to do a single exit or you want to do it an asset exit, because collectively everyone had to come to one ground. Collectively, they had to take a decision to actually take an exit out of this investment. So that was one challenge that was really strongly faced. Most important, regulation. Now, since it was absolutely unorganized, there was no scope for any regulation to actually be there. There was no any structure. Nothing was followed. Moving on to the next one, I would want to cover the other challenges that were there in terms of the unorganized market. There was the capital again. So there was the problems, the risks that were involved. Of course, these are all asset-backed investments. So your capital was protected. Of course, it will come with the star mark, because in what location, what kind of asset, what kind of tenant is coming on to there, what kind of documentation was followed. Whether this is an income-generating asset or not, it may or may not be, because at that point in time, maybe it was collective decision to buy a land, to buy a warehouse. Maybe it's not rented out, to buy a warehouse which is rented out, to understand the lock-in, to understand the kind of profile of tenant. So a lot of factors were dependent. Again, of course, tenant vacancy, that was a challenge that you only had to take it up, because as an owner, you didn't have a choice per se to actually, if you are probably a part holder of that particular asset, if the tenant moves out, then you are supposed to get into action along with the others to find a new tenant. If it's your job, great. If it's not, then you are absolutely in for a trouble, because you have to quit your everyday work and you will have to go and focus on that. And mark to market rent. Now, technically, there was no mechanism. Whatever is the, okay, बाजू वाले ने कितने में दिया है, what is the rent existing in the next adjoining warehouse, next building or the next project, and that's how the market rent was derived, and you would probably be aware. Now, what is the tenant improvement scope, what kind of work you were supposed to do, whether that actually should be added to the scope of the work or the rent that you are charging. There was no mechanism as such as to whether you derive that factor. And those were the challenges that were actually present with the unorganized way of doing. So fractional per se in India originates back even like 20, 25 years, but that was an unorganized market with no structure, nothing. There used to just some known people coming together, buying asset together, getting into dispute. So these are all the challenges that we face. Now, Abhiram, can we move to the previous slide? Raj, what do you think? What happened when FOP came in? That is the fractional ownership platforms which came in. What happened then?
We go back from mark to market rental, like Rishi said. So the major shift that's happened from the unorganized market to fractional ownership platforms is that professionals got involved. And, the selection of the property, just think for a moment, if you had to earn a rental income from a property, what are the steps that one has to take? You have to go identify the property. You have to figure out whether it's the appropriate asset location, whether it's the right grade of property that you're buying. Then you do the transaction, the paperwork. Then you put it on rent, and post that also there's still maintenance and management that the property will require, right? So that's a major shift. The asset manager comes in and the asset manager takes care of this. Luckily, of course, as time has gone by, you have a lot of platforms like CRE Matrix, PropStack, which actually give you comparison of past transactions which are taken from the sub-registrar's office. So you get a lot better idea, and these are presented by the asset managers itself from the asset manager's deck itself, and of course you can verify that. So mark-to-market rent in terms of the tenancy and vacancy, well, most of these fractional ownership platforms, where they come up with commercial assets, typically they are pre-leased, or they're supposed to be pre-leased, and which is what we pushed for, because when it's pre-leased, the tenant's already in order, or the asset manager doesn't have to spend time figuring out the tenant. Vacancy risk, because that is there, which means that, let's say the term is 5 years. After 5 years, what happens? Because it's an asset manager, these are professionals. Typically, they'll take care of either renewing the current tenant or getting another tenant, because they have a 3 to 6 months notice period. Income generating, we've seen in fractional ownership platforms that there are proposals which are not income generating, which are under construction. Again, under construction comes with its own challenges and risks. Sometimes what is being committed or required by the incoming tenant may not actually translate from paper to ground reality. And of course, there could be delays. Now, there are a lot of ifs and buts here which could throw the entire transaction out of gear or delay. Now, when it's delayed, it means a direct hit on your returns, depending on, of course, how the asset managers have structured it. Of course, asset managers smart enough, they ensure the top guys that we're working with, they are smart enough, they will ensure that if there is a delay, there is a penalty in a way that the investor doesn't suffer in terms of their income. Again, capital, it is asset backed, so low volatility. And if you've done the paperwork properly, whether it's unorganized or fractional ownership, your money is not going to go up in the air. From a regulation perspective, typically, as we combining with the first point, agreement is a special purpose vehicle, typically private limited or a LLP. Again, we've got a long video with Krupa discussing how the private limited structure is far better than the LLP because of the fact that there are a lot of checks and balances in it for the investor. In terms of decision making, again, it's formal and by vote. Because it's a private limited, the director cannot take decisions without the approval of 75% of the shareholders, and there is a formal process where voting is required, where again here the catch here is the meeting. So 75% of the people present in the meeting. Now this meeting could be offline under the four corners of the private limited law. It is allowed that you can have a offline meeting, but again, Krupa will share, in the last 1.5 to 2 years, we've been pushing all the asset managers, to ensure that they also give provision for online meeting. Krupa is going to come to what SM REIT says about it. In terms of property management selection, again, we've discussed asset managers there. Liquidity, well, because the holding is through shares, you are dependent on the asset manager or somebody like us to help you exit. And therefore, that's one part. The second part is the entire asset sale. What's going to happen now is that because the dependence of the asset managers there, we are dependent on the asset managers for the asset sale. In all likelihood, with SM REITs, people can technically play a long-term game. And for more about how these parameters will play out in SM REITs, over to you.
Thanks, Raj. So now we come to SM REITs. So just a small background, friends. SM REITs, SEBI has come out with SM REIT provisions in March 2024. And majorly, this was brought because SEBI knows that there is this unorganized market, plus the FOPs were taking the center stage now. So they wanted to regulate these FOPs. So quickly coming to the agreement type, as Raj mentioned, that for SPV, the FOPs had an option to either go for a private company or a LLP, and it was very contractual in nature. So there was a agreement, majorly a shareholders agreement entered with the investors. So it was more contractual. But in SM REIT, SEBI has standardized this process. So in SM REIT, the SM REIT has to come up with a scheme document which is public in nature. It is available on the SEBI website and also on the website of the stock exchanges, giving out all the necessary details for the investor to invest funds, be it about the asset, about the tenant, about the trustee. We will see what kind of parties are involved in an SM REIT later in this presentation. But yes, it's a big yes because of the standardization type. Yes, decision making, as Raj said, that now all the unit holders need to vote. Okay, it is an online meeting. SEBI has mandated for an online meeting, giving an opportunity to all the unit holders or the investors to vote and participate in the decision making. Investors will have to exercise this right. Property management and selection, as investment managers themselves are expert. Okay, they are eligibility criteria set where they need to have experience in real estate market and real estate fund management. The property selection management is all taken by care by the investment manager who are expert in nature, so investors can continue with their daily routine, and keeping all the hazards are on the investment manager to take care of the property. Liquidity comparatively high than the unorganized and FOP, because in FOP, all the securities were majorly in physical format. Okay, and you were dependent, you had to search for a buyer to sell your shares. Here, as it will be in the demat format, traded on the stock exchange, the liquidity is comparatively higher than the unorganized and FOP. Regulation, as I mentioned, now there is a dedicated regulation regulating this SM REITs, which is SM REIT regulations by SEBI. Hence, now the investors know whom to complain in case they face any issues. And so, yes, a good move. They have a watchdog named SEBI. Now, the next is the risk that are involved. With respect to the capital risk, as the underlying asset is a real estate property, of course, the volatility is less, hence your capital is safeguarded. So income generating, as Raj mentioned, that FOP may or may not be income generating. Okay, in FOPs, they can invest in under construction properties, but not with SM REITs. SEBI mandates 95% of the funds raised need to be invested only in income generating asset, and 5% is saved for rainy days. So a big yes, safeguarding the investors. Tenants in vacancy risk always persists, but however, as I said, investment manager are experts. They know, they do a background check of the tenants who is occupying the property and giving the rental yields to the investors. And in case if the tenant is vacating, they find an other good tenant to occupy the property. And mark to market rent, yes, as investment manager, again, as they are experts, they know what is the market, what is the real estate market, yield market, and hence the investors can get right type of investment rent yield on their investments. So a big yes with respect to SM REITs as we compare it with unorganized and FOPs.
Coming on to SM REIT features now, what is SM REITs and why it needs to come in? We already have a REIT, so there will be a strong comparison to a REIT that is already existing. So technically, small and medium REITs were being brought in to ensure that there are small investors who can actually participate. And of course, it's being regulated really well. So size of these funds is from 50 crores to 500 crores. So any scheme that gets launched under SM REITs has to be 50 to 500. Anything above 500, it qualifies for the normal REITs. Now we have already 4 REITs that are already existing. So this was brought to ensure that the scheme size is limited. There's a lot of transparency that comes on the table, and they have regulated and monitored this structure really well. So a lot of things will come into play, which I'm sure in the future slides you will realize what kind of structuring has been come into play. Now, rightly Krupa mentioned that these are all 95% rent yielding assets. Now we look at this quality. I mean, even in the FOPs, we realized one thing: the asset managers were really conscious. Like few of the asset managers were really conscious of what kind of asset they are bringing on the table, what kind of tenant, what kind of location is being played around. The same thing goes here. Here, the criteria is actually a little more stricter because the investment manager is liable for his skin in the game. So the kind of asset that he brings will also ensure that his liquidity or his exit and liquidity is being taken care of. We should thank SEBI for putting up right prerequisites for even the investment manager. Now, again, the third rule, which is the most important, there can be no related parties. So technically a sponsor or an investment manager with the tenant, with the asset management company, they can never be a related entity. They all have to be separate entities. So this brings in a lot of transparency on the table. earlier we have come across a lot of platforms where, for example, the asset manager is managing one company, has a sister concern which is doing the fit out and the interior work for the same asset, and has the third entity which is actually the tenant of the same particular asset. So technically, all the three companies headed by one single person, and that kind of structure used to bring in a lot of questions. What about the authenticity? What kind of rents are being charged? What kind of costs are being implicated? So there are, since one person handling the show, there are a lot of chances that things can go south for a lot of other reasons. There can be non-disclosures, or things can be managed virtually. Here, a lot of these risks are being taken care of, and that's where we really recommend, and we really are looking bullish about SM REITs and the features ahead. Over to you, Raj.
So currently with the fractional ownership platforms in the commercial space, typically we've seen the ticket size to be 25 lakhs. And we also have fractional holiday homes. There we've seen ticket size averaging from 5 lakhs going up to a crore. But with SM REITs, that changes. The minimum unit price is going to be 10 lakhs, which is again a welcome move. And we've heard SEBI online videos plus in person. We know the intent is over a period of time that they're going to reduce the 10 lakh limit to lower figures. Coming to public holding, 25% of the entire issue has to be minimum held by the public.
Yes. And taking who can invest in SM REITs. So as compared to FOPs, only NRIs and Indians were allowed to invest in FOP market. Okay. Now with SM REITs, Indians along with foreigners, FIIs can invest in SM REIT. Hence, we can reap the benefit of global growing market. 25% maximum allotment to a single person, a welcome move by SEBI. This will help in decentralization of power. So no person can have more than 25% of the units of the SM REIT. Hence, the whatever decisions are taken, it will be taken in a democratic way. So a welcome move. So now as we have been listening to SM REITs, let us first understand that what are the parties involved in SM REIT. So this is a small structure of SM REIT. SEBI is obviously the regulator and who provides license for SM REIT. Here we have investment manager and trustee, very important. So trustee is an entity which is registered with SEBI under a special regulation known as SEBI Debenture Trustee Regulations. So just for example, we have like Beacon Trustee, Axis Trusteeship, ICICI Trusteeship and many more. So trustee here are independent entity which are already regulated by SEBI. Trustee acts as a custodian for the assets where the investors like you and me will invest funds here. So they are the custodian. They make sure that the investors' rights and the interest is protected. Further, they also keep a check on the activities done by the investment manager. So here you can say there is a maker and checker balance. So investment manager will manage the funds and the assets, and trustee will keep an eye on the activities of the investment manager. And very important, trustee also acts as a platform or a body for dispute resolution. So if there is any dispute between the investment manager and the investors, or there are any complaints, trustee will be the right person or the right entity to solve the same. Investment managers are like Harta Karta of SM REITs. So what does an investment manager do? Investment manager will identify the property, a lucrative property, and will raise funds where investors will put money, and investment manager will invest, so the investment manager will then manage these funds. Further, the investment manager will also manage the asset. And further, investment manager has been given the responsibility by SEBI to do all the compliances, all the disclosures. Investment manager needs to appoint a valuer. So there will be a valuer every year appointed who will value this asset, and a valuation report will be submitted annually to SEBI, to investors, and will be made public. So investors know that what is the valuation of their asset in which they have invested funds. What does an SPV stands for? Special Purpose Vehicle. So SPV is a company which ultimately will hold the asset, this income generating asset, and unit holders are the investors who will invest in this SPV or in this SM REIT. So the structure is the investment manager will take a SM REIT license. It's a trust, and in turn this REIT will hold all the capital of SPV, and SM REITs will issue units to the investors, which are known as unit holders. So this is a small structure of SM REITs. To understand how do this SM REIT gets registered with SEBI. So very important, whoever wants to start with this SM REIT business or this wants to start or take a license with SEBI, they have to first incorporate a trust, okay, and register this trust with the SEBI. And then this investment manager will file the draft offer document with SEBI saying that what kind of real estate property have they shortlisted and giving all the details about it. Then they will raise funds from the investors, that is accumulation of funds, and in turn that will be invested in the SPV. And then they will manage the asset, and very important, SEBI has mandated to distribute this income which is generated by this SPV, that is the rental yield which will be generated by this SPV every quarter with the investors. So next slide, we will see what are the costs involved here. So any person today who wants to start with this SM REIT has to pay 1 lakh rupees as the application fee with the SEBI, which is non-refundable in nature. And once the license is approved, they have to pay rupees 10 lakh as the license fees. And whenever they come out with an IPO, that is to raise funds, then offer to raise funds, they have to pay 0.1% of the issue size as the filing fees with the SEBI. So now, as investment manager, a very important entity here who is managing the funds and the assets of the SM REIT. So SEBI has come out with a lot of checks and balances to make sure that the investment managers are credible in nature. So they have come out with the eligibility criteria who can take license with SEBI. So foremost criteria is net worth. Minimum 20 crore of net worth is required for an investment manager to come up with an SM REIT license. And very important, out of this 20 crore, 10 crore of net worth needs to be in positive liquid assets. So could be like mutual funds, government bonds, etc. They need to have a prior experience of at least 2 years in real estate industry or managing real estate funds. So they are well versed with the nuances of this real estate industry. As investment manager is not a single person, it's an entity. So it's a private limited company, and of course, as we all know, private limited companies have a board of directors who run this company. So here, at least 50% of the board should comprise of independent directors. So in turn here, trustees also keeping a check on the investment manager. Here, even the independent directors are seeing the corporate governances undertaken by this investment manager. And very important, these independent directors are allowed to serve on the board of only one investment manager. So they can focus on a single investment manager. So it's definitely a welcome move. As Rishi mentioned earlier, there is a skin in the game. So investment manager, as their skin is in the game. That is, if the REIT is raising funds via debt also, then minimum 15% of the funds raised needs to be invested by the investment manager. And if there is no debt, then it's 5%. And these funds are locked in for 3 years. So hence what happens is this gives a cushion to the investors as the investment manager is personally involved financially here, as his skin is also in the game. Further, SEBI has given a detailed plan of 20 years during which this investment manager can sell his holdings. So this will, of course, this gives a rise to responsibility to this investment manager to take correct decisions to maintain the asset very properly. Further, what happens as investment manager can come out with various schemes. So hence, they don't dilute their attention. So in each scheme, these guys needs to invest. So yes, they are personally invested. So a big thumbs up for. Now we'll come to the migration. So SEBI came up with this regulation with an intention to migrate the existing FOPs, and they want to regulate these FOPs. So the foremost thing that will come into picture is, as I said, that in FOPs, all the securities, could be your CCDs or equities, were in physical nature. Now, as the investment manager or the SM REIT has to come out with an IPO, all your holdings or the units will be in demat in nature. Okay, that will be traded on the stock exchange. Hence, you forget about all the hazards of holding physical securities. Further, the income that an investor receives from this SM REITs is taxable in the hands of the investors according to their slab rates, which was same as that in the case of FOPs also. Now we come to the sale. So then when an investor sell this unit holders, it will be taxed as capital gains in the hands of the investors. And of course, this depends upon your holding. Short-term or long-term capital gains will be levied depending upon how long do you hold these units. One very interesting point here, as I mentioned, that SM REITs can also raise funds via debt. So any debt repayment to the investors will also be taxed as capital gains. So this is from my side with respect to taxation. Raj?
Now that we've discussed about the structure, the root causes of why SM REITs was needed, we've also discussed the structure, and we talk about now why India, and we've spoken about the 40,000 figure. And one fundamental reason is, of course, India's GDP is growing, right? 2023, we're looking at 6%. And 2024, we are looking at 7%. And this is a year-on-year growth projection, whereas China is around the 5.1, 5.4 levels. And we are the highest GDP growing country in the world.
Adding to what Raj has said, that is boosting India's economy. Now, two different images are there in front of you. We had two events in last 4 years of time. One is a live event where we actually we faced COVID, which was one of the largest, probably an event that happened throughout the globe, and it actually pandemic, well, that rightly said, and it has affected everyone. Now, if we look at the companies or the MNCs or those who are actually the manufacturing global entities, were there, they actually got the biggest jolt because China had been one of the biggest attractor for manufacturing companies, because China was surplus with manpower. They had cheap infrastructure, labor that was available, and that's what prompted throughout everyone. So in last 2 to 3 decades of time, China became a manufacturing hub through and throughout, and that's where we saw a lot of companies actually moving to China for setting up their. The best example is Apple products designed in California but manufactured in China. So that's where the labeling used to come in, and we know the scale. Or even today, China is actually miles ahead in terms of the infrastructure that they have created. But COVID made everyone realize that they need China plus one. Now that one got an opportunity for India as a country where there is a lot of labor, manpower, economic resources, everything. I mean, the policies are stable government, which is there to stable policies are there. So at least I agree. There'll be a lot of people saying that ease of business have been more, but yeah, we can see a lot of shift happening from global companies to create that. Again, I'll refer back to the same example, iPhone 16 being manufactured in India, and for the first time, if you look at the iPhone 16 Pro prices, they are not 1,50,000 and 1,35,000. They are 1,90,000 starting. So if you look at that pricing, that price tag, that has been a bigger indicator for us that yes, global companies have put that traction to India. We have a little image that is disturbing for all of us. That's current situation in Bangladesh, which they saw the turmoil. Now, Bangladesh was considered to be the textile hub for the globe because of their, good labor availability and cheap, not cheap, but rather economy of scale. The cost of manufacturing was very low. We saw that impact. Now, just by change in government, change of hand, then not in a right way, maybe in a way which was not probably anticipated by a lot of us, but it happened. And we saw how the entire country had come to a standstill. And this impacted a lot of people who were dependent on China. Again, on Bangladesh for their manufacturing requirements. Now we see all these impacts. Now there are a lot of global factors which we have seen, but these were two really strong factors which have affected, and we see a lot of traction coming down to India. So, Raj, would you want to throw some light on this? What are the macro factors that are affecting SMBs?
Right. So we've spoken about the global factors. We've spoken about the subcontinent factors. Now we come to the nation. So we are a dollar rental for MNCs, and I'll explain what that means. Multinational corporations to occupy A-grade offices in India are paying a $1 rental, which is around 80 to 85 rupees. They were paying $1 15 years back, where our dollar to rupees was 55 rupees. Now dollar to rupees is 85 rupees. So imagine occupying A-grade assets in a country with no escalation on rent, because let's remember that the multinational corporations continue to earn in dollars, right? So A-grade offices, to occupy, of course, barring Bombay and Gurgaon. I'm saying largely you talk about Bangalore, Hyderabad, all these places, Mysore. So we are in and around that dollar rental, which is a big plus. Now, that's a very clear-cut financial thing. We are also seeing, you may have seen news about India being the global capacity centers, GCC as it's called. And these are the factors why they're looking at India as a hub. Second, of course, is the talent. You pick a person with an equivalent talent in an advanced country, they'll have to pay at least 3 times more money. So from that perspective, we've got fantastic talent here. You're seeing more and more R&D centers being set up here. And also from a domestic consumption perspective, right? Our middle class is ballooning. And as you see that post-COVID, I think everybody is has realized that, life's short. So everybody wants to spend, right? You can see that in and around on a daily basis, right? So combine all these factors. The fact that you have a fantastic domestic consumption, you have a superb workforce, very talented workforce that comes comparatively cheap as compared to global standards. And then they're only paying $1 as a rental. And if you see, more and more people are moving towards A-grade offices because the younger workforce is already attuned to moving around in those kind of spaces, right? And therefore, we see a big shift towards consumption of these kind of assets.
Now, this is a very exciting slide for us. Raj, we have been participating in a lot of webinars, a lot of seminars. Just to share with all of you, Pradeep Rao is the gentleman from SEBI who is heading the entire SM REIT. He's a guy and gentleman also responsible for the inverts and all. He's managing the show for them. So we see. So I would just want to ask one question. If at all any of you can understand what was mutual funds way back around 20 years back or 25 years back, it was at a very nascent stage where we could see them growing. Now, there's an image that we have shared here that technically today, this is December 23, but I think if I want to quote unquote, the entire asset under management right now is around 66 lakh crores in terms of Indian rupees. And that's the kind of traction that they have grown from. And we have been participant of one of the seminars where there were the fund managers, the mutual fund managers who were handling funds from Grow, from ICICI, all these guys were part of the seminar, and they said they were just saying that we have just scratched the surface. As in the penetration is probably 5 to 6% of the kind of capacity that India has to invest, or probably they can explore. So probably if you look at the kind of opportunity that SM REIT is sitting on, we are just at right now 4,000 crores. We're talking about 40,000 crores, and we see this asset class growing. We see mutual fund industry growing at what ground, and we see SM REITs with so much structure in place, with the kind of assets, resources in place. We know the 40,000 crore can actually reach out to a lot of other numbers as well. But yeah, right now let's talk about 40,000 crores. So Raj, question to you. Mutual fund sahi hai, but kaun sa?
Yeah, so that's the puzzle. We've been going around about advertising mutual funds sahi hai, but the fact is there are 2,500 schemes as of today. Now that brings a question. right? As to which one do you actually buy, and how is it that will you evaluate? So we see a similar thing happening even with SM REITs. Given all that we've already discussed, we are going to see an explosion of properties that are going to be in fractional in SM REITs, right? But how does one go about evaluating it? So very important. Number one, it has to meet your goals. There are no other asset classes that actually give you recurring income, right? Which is adjusted for inflation, which means the rental today is, let's say, 100 rupees. Typically, you have a 5% escalation year on year or 50% every 3 years, right? In some sense, it is adjusted for inflation. Now, there are two kinds of properties here. Some that will actually give you low rental yields, but they might be great in terms of building wealth over a period of time. A case in point, we have a property in Pune, which currently is in Hinjewadi. It's an industrial plot. And that particular zone, the entire market is converting residential. We've got a 5+5 year agreement there with an industrial player who's setting up their R&D center. Now, 10 years hence, imagine this plot of land, which is just going to be ground plus one, right? The amount of traction that it's going to get 10 years hence when you potentially can convert this into a residential, which will be a high rise, which means you get higher FSI and so on and so forth. So you have property options like that also. So one thing is how it's fitting into your goals, number one. Right. Number two, you have to research about the asset manager. Even right now, for example, there must be not less than 20 asset managers in the country. And we work only with the top four because our methodology is we go meet them, we understand their background, we speak to the founders, we speak to the co-founders. Only after we are satisfied that, yes, these guys have the ability to deliver, given that we've got real estate experience, we ask them the kind of questions that we want answers to. And once we are satisfied, we only then start working with them. Post that, you have to research whether the opportunity that is being given is the right opportunity. Mind you, not every asset manager will always come up with a fantastic offer or a product, right? You have to, it's got to be meritocratic to that particular opportunity. You have to see the merits of that particular opportunity and not because it comes from a certain brand that it will always be good. Right. So what does it mean in terms of researching the right property? You have to look, and as you may have seen our videos, we suggest that you go in for an A-grade property and A-grade location. Now, that can't be done sitting in office. That can't be done if you are, let's say a lot of investors might be overseas or not within the country, within the city. And so we physically do that, right? We go check out the property because luckily we've been exposed to A-grade assets, whether cyber city in Gurgaon, or we are in Bombay, so Capital, One BKC, whether it's embassy projects or brigade projects in Bangalore. So we've been exposed to a lot of A-grade assets, which enables us to understand that what is being shown on the presentation doesn't one translate on paper, and what is the element of truth in that. So these are the checks that one has to do. And of course, from there, you have to check whether, okay, A-grade location, A-grade property, it's good value for money, how? But you have to buy it at the right price. You have to see what is the ongoing rate in the market in similar projects, right? And then, of course, you have to also ensure that the property rentals are not inflated. A case in point, we got an investor who asked us to evaluate an option from Hyderabad. Now, Hyderabad, that particular micro market, had a rental of 60 rupees. The developer was committing 85 rupees for the next 3 years. And therefore, with a 10% net yield, developer, instead of selling the property at 10,000, because he's giving inflated rentals, he was inflating the sell price and taking 12,000 rupees. Now, this is disastrous for any investor because, number one, after 3 years, what is developer done? Basically, the developer is doing a construction finance, which means that if he was to go outside, he would get loaned anything from 12 to 18%, depending on who the developer is, their books of accounts, so on and so forth. Because he's inflating the rentals, 3 years hence, you're not going to find somebody at 85 rupees. You may find somebody from, let's say, 65 to 70, 75, right? Now, that's a big hit for the investor because at that point in time, you're not going to fetch those rentals, number one. The capital appreciation the developer's already taken away. So from 10,000 to 12,000, you've already paid a higher price. So these are things that are very important to check. And finally, the documentation. So again, given that, we are working with the top asset managers, we don't see a problem with the title of the property, but the challenge is to ensure at least fractional ownership so far. SM REITs, the situation is going to be different. but fractional ownership platforms will continue, and those kind of properties will come in. So the way to evaluate the documentation is also to check what is the agreement between you and the SPV, which is the special purpose vehicle, right? Again, Krupa mentioned about non-standardization. We've had agreements like shareholder agreement. One platform would do that, another would do articles of association, right, and incorporate everything there. So these are important things. And again, like Krupa pointed out, all these guys want some sort of flexibility, and naturally so, right? They would look for an offline meeting, and then we have to push them, say, no, you have to give provision for online meeting because that's in the investor's interest. Thankfully, SEBI has banned offline meetings, so which is great news. But these are the steps that one needs to take to evaluate a particular investment opportunity. And of course, if you don't have the time or the expertise to do that, all you need to do is just simply call us.
In nutshell, why SM REIT was required, or what is the intent of SEBI in bringing this SM REIT? So as earlier mentioned, that FOP was unorganized, though it was organized in a way, but still had flexibility. It was more contractual in nature. So hence a formalization was required, which is brought by SM REITs. A formal structure is given where you have independent parties taking care of the assets and the investors. As they are independent, they are considered as experts. So as your investment managers are an expert having expertise in real estate. Further, trustees, they know their job well, as they are also registered with SEBI. So they keep a check on this investment manager. Hence, SM REITs bring expert guidance, as you are in the hands of experts who are managing your funds raised and your assets. Sachetization, very important for a normal man or for a common man today to buy such a huge properties out of question. But with SM REITs, a normal man or a common man today can buy units or fraction of these properties, and hence you can also reap the benefits of high income yield here. So yes, so formalization, sachetization, and expert guidance can be said that are the intention of SEBI. So Raj, what do you offer? Yeah.
So as a platform, here are three chief things that we are doing. For investors, we are offering curated investment options. We saw on the last slide, last slide, how one needs to evaluate an opportunity, but we do that for you. So whether it's commercial, pre-leased, fractional platforms, and now going forward SM REITs, or whether it's holiday homes and fractional, right? These are opportunities, or any other investment options for that matter, even end-use options. So this is what we bring on the table for you.
For property owners or the developers, we help them with all the end-to-end solution, could be sales and legal. So from structuring your transaction to the type of securities to be issued for MOPs and to avail SEBI licenses for SM REITs, you can get everything under one roof. Raj and Rishi can help you with all the sales solutions.
Yeah, so we have also, so asset managers always, the biggest pain point for them is to get the quality assets on the table. And from our experience of real estate, also managing and working with the FOPs for the last 4.5 years, we have realized that any asset that you bring on the table is actually the crux of any scheme or any offer that you bring on the table. So we have recently transacted with one of the largest platforms in India for their asset requirement, and we have actually given them an asset. And we are in process of working with others as well. And we understand now the entire core behind what kind of asset, what kind of grade A assets that are required for your investment to be protected, and rather having a right tenant. I mean, if you have the right asset, everything is taken care of. The tenant, the liquidity, the exit, your appreciation, all of these factors are taken care of. And that's the reason where we come in. We have tried building some expertise and some SOPs behind that as to how we need to transact on this. And that's where we come in. So right properties to add to the platform and also to your portfolio.
Happy to answer any questions that you guys may have.